Hey guys, Scott Williams with Relentless Trading. Last month, I went on record and made a prediction about Tesla's stock price, what I thought it was going to do over the next 30 days. And I was wrong. I was dead wrong. But I still made money. Check it out. First things first though, let's go back in time 1 month so you can take a look at the clip where I made my horrible prediction. During the stock split, you had a nice run up here and it peaked at 502, and then you had a pullback because obviously this was overrun. You can see on the RSI that it's kind of spiked out. That's the relative strength index, meaning it was a little bit overbought. So it's dipped back down into the normal range and now it's working its way back up. I think this stock is going to continue to go up, so I'm going to trade a bullish trading strategy. As you can tell, I predicted the stock price would continue to go up, but here's what actually happened. Within a few days after we placed the trade, Tesla's stock price went from somewhere around $463 a share all the way down to tapping $350 a share. That's a $113 drop, and it accounts for about a 25% drop in the total share price. That's major. So any investor that purchased call options, that bought call options here, expecting the share price to go up, they certainly lost. There's not too many ways that you can bounce back from that type of a percentage loss on a stock price. Now, if you bought put options, you'd probably be in good shape. You made a good amount of money on that drop. Again, my call on the stock was not bearish, it was a bullish trade. But let's take a look at what happened during the next 3 weeks of our option period. As you can tell, from where we sold our option, the price has actually gone down. It had its first initial drop, then it worked its way back up, and now it's having a nice pullback again. So if you had bought a call option, there might have been a chance where it spiked up here if you had bought enough time to where the time decay wasn't affecting you, that you could have squeaked out with a small profit, but most traders are not buying enough time to counteract that time decay. What we did is we sold a bull put spread here. Our short strike price was down here at 282, and the expiration date for our option, of course, was 10/16, which was last Friday. So when we sold the option, the stock price is right about here. After that initial dip, I was actually not concerned because even though the stock price fell all the way down here to 350, it didn't get anywhere close to 282. And that's the power of selling option spreads. So at no time was my trade ever really in jeopardy. I just sat back and collected the premium. And that, my friends, is actually how I was completely wrong on my prediction that the stock price would go up. It really did the opposite, and I was still able to make money on the trade. Now, I'm so confident that Tesla's price is going to stay above this range that I'm going to go in and place another trade that looks almost identical to this one. Okay, really similar trade here. We're going to go to an 87.26, probably out of the money. We'll choose the 0.09 delta. We're putting 1,800 in. We'll get 200 out, so really similar to the last trade. That's about an 11% ROI. We're a little closer to the current stock price. The metrics aren't quite the same as last time. We'll be at 318 instead of down at 282, but that's okay. Then all I need to do is readjust my lines. 318, and I'll move my expiration date out to 11/20, which is about 30 days out. So as long as the stock price is above the yellow line, when it crosses the gray line, we make money again. And that's the power of selling options.